Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Wednesday, May the 30th, 2012. Well, a continuation of the trend to the downside today. A candle has made a lower high and a lower low, and a very large black-bodied candle. Previous day's trading, we saw the change of trend back to the downside, previously an uptrend on a spinning top type candle, did raise some doubt about continuation of the trend to the downside, and the market was finding support at the 124.55 area, which was a very important area of support to this market. Today the market's taken that out in a very, very solid way, a very, very bearish trading day today, with the sellers making net substantial amount of net bearish progress. The sellers are keen. They've closed the market so far below the previous close, and they've closed the market down towards the low, with them taking very strong control of this market and being very strongly committed to taking this market lower. There isn't any major support for this market until we trade down to the 121.55 level, so there is a strong possibility that if the sellers can maintain this downside momentum, that the market could be trading down there within the next few trading days. So a very strong possibility of that happening. In terms of the Fibonacci extension, and what we're looking at here is the relationship of the current downtrend, the first time frame downtrend, with the market making a series of lower highs and lower lows, in relation to the previous first time frame downtrend. And we're seeing that the market has found some support at the 78.6% level. Now the value of this is that the relationship gives us some target areas where we may potentially see support coming in, and that's important considering that based on peaks and troughs there's this large void of support down below where the market's trading until we trade down to 121.50 roughly. But these levels give us some important areas, and the market, as I've said, is interacting with the 78.6% level at 123.65. And as the current candle is developing, we are seeing a small white body develop there, so there is potential for some buying to come in here. That 78.6% level is a minor level compared to the others, however, and more important is the 100% level just below here at 122.95. So that's a very important level that we should be watching if we do see the market continue trending down tomorrow. Below there we have the 161.8% level, but that's below one of the important swing lows from previous, so there is a possibility that the market will hold up before it trades down to the 161.8% level, but the important level is the 100% at 122.95. Looking at the Fibonacci retracement, and we have an expansion of that going on rather than a retracement. We've the market in relation to the previous uptrend, now trending down, has expanded beyond the 100% level, and we had a target here for the 161.8% level. The market has totally blown that away today with this bearish close, and the next area is the 261.8% level, which coincides roughly with that level that we have with the Fibonacci extension at 122.89 roughly. The other was 122.95, so that's a very, very important level once again, with the confluence of the support coming in based on the two Fibonacci techniques. In terms of Ichimoku, we have a very, very bearish market in all three time frames. We have the market bearish in the long-term time frame by trading below the cloud, bearish in the short-term and medium-term time frame by trading below the Kijun-sen, which is the pink line, and bearish in the fast-term time frame by trading below the Tenkan-sen. Now, with this strongly bearish black candle, the market is looking a little bit overextended as well. So we are trading a fair way away from the Tenkan-sen, and that tends to act a bit like a rubber band. We see the market move away from the equilibrium in the short-term time frame, and then when it gets too far it retraces back towards there and bounces off. So there is a possibility you could see the market retrace back up towards this area. I suggest that we should watch this market as we trade to those important Fibonacci levels around 122.95. roughly 123. And if we see bullishness coming in, there's probably a good possibility that we could see the market bouncing off. We could also see the market retracing from around this level where it is at the moment, coincided with the 78.6% Fibonacci level, but we are looking a little bit overextended. If we do rally, then we have potential resistance at 124.55, then at 125.86, coinciding with where the Tenkan-sen is trading. And very often when we have solid downside momentum, the Tenkan-sen is that first area of resistance, so that will be a very, very solid area if the market does rally.